News as it should be.
A very good morning. This Monday morning you are watching News 9. Well, it is a good morning so far, but another 15 minutes to go for the stock markets to open. Is this the Black Monday in the making? Remember, US stocks crashed late Friday evening and the mood on the futures market in Asia also not looking good. The Nikkei 225, Japan's index, as well as the Kospi, South Korea's index, is down this morning. The futures markets taking a massive beating. Many are calling this a Black Monday. Let's see the mood of the Indian markets as we come back right here on Morning Brief at 9. This is Morning Brief at 9. We will bring you a mood check of the Indian markets as they open in just about 13 to 14 minutes from now. But the mood on Asian markets is not looking good. We will keep an eye on all that's happening in the world of Trump tariffs. But first, let's look at some other stories which are making headlines here in India. First up, let's begin with the Reserve Bank of India. The RBI kicks off its first monetary policy review meeting of this financial year, FY26, starting today. Now remember, the three-day deliberation by the MPC will conclude on Wednesday, April 9th, with the policy decision to be announced at 10 a.m. on Wednesday. Is it going to be another MPC of rate cut or not? We will get to know only on Wednesday. Meanwhile, remember, the MPC, which meets 6 times a year, is expected to continue its focus on supporting India's economic growth amid easing inflation concerns. Now, in its previous meeting held in the month of February, which was the last meeting by the RBI for FY25, the Monetary Policy Committee had unanimously cut repo rate 25 basis points. It came down from 6.5% to 6.25%, marking the first reduction in almost 5 years. Now remember, India has largely managed to keep inflation within the RBI's target band of 2 to 6%, with the medium-term goal of about 4%. With inflation relatively under control, the central bank is expected to pivot further, boosting growth. Meanwhile, global economic dynamics are in a state of flux as US President Donald Trump has announced steep tariffs ranging from 11% all the way to 49% on imports from 60 countries. Now, these, of course, include India as well as China. These tariffs, remember, will also come into effect on April 9th, the same day that the RBI will announce its policy decision. Now, as the RBI gears up to, if we can say, fine-tune its monetary stance, all eyes will be on how it balances domestic growth priorities with emerging global trade headwinds. Moving on, Commerce and Industry Minister Piyush Goyal is likely to hold a meeting with India's exporters on Wednesday, again on April 9th, and he endeavors to take stock of issues that are likely to be faced by Indian traders due to the imposition of an additional 26% reciprocal tariff by the Trump administration in the US. Now, senior officials of the Commerce Ministry and representatives of the Export Promotion Council and the Federation of Indian Export Organizations, or FIO, will attend these deliberations. This, according to an industry official who told PTI. The US accounts for about 18% of India's total goods exports. 18% of India's total goods exports are for the US as the destination. 6.22% of India's imports come from the US, and the bilateral trade between India and US stands at about 10.73% of India's total trade. Now, exports have declined for the 4th month in February due to global economic uncertainties. Meanwhile, India's merchandise exports to the US stood at about $395.6 billion for the April 2024 to February 2025 period. Now, this against $395.38 billion in the same period last year. The estimated value of service exports during the April to February period is around $355 billion as compared to about $311 billion in the same period last year. Now, India's export sectors such as shrimp, carpet, medical devices and gold jewelry as well as gems will face the impact of the additional 26% additional duties announced by the US. And staying with news pertaining to Commerce Minister Piyush Goyal, remember his statements on the startup Mahakumbh and then the kind of retaliation he faced from the likes of India's startups, including Adit Palicha of Zepto as well as industry veteran Mohandas Pai. Now, boAt co-founder Aman Gupta has come out in support of the Commerce and Industry Minister's recent remarks during the Indian startups to focus more on deep tech innovation. Now, Aman Gupta's comments come amid an ongoing debate within the startup ecosystem where several founders have countered Goyal's critique of consumer-focused ventures like food delivery and luxury goods startups. So Aman Gupta, the founder of boAt, took to social media X to echo Goyal's call for startups to move beyond consumer-centric models like food delivery and fantasy sports apps and instead prioritize technologies like AI, robotics and quantum computing. Now remember, the Commerce and Industry Minister, Mr. Piyush Goyal, at the inaugural address at the Startup Mahakumbh last week, had asked Indian startup community to shift their focus from grocery delivery and ice cream making to high-tech sectors like semiconductors, machine learning, robotics and AI. Minister Piyush Goyal had questioned Indian food delivery startups for turning unemployed youth into cheap labor. The minister had pointed out that only about 1,000 of India's 1.57 lakh recognized startups operate in deep tech spaces, a situation he described as disturbing given India's aspirations to become a developed nation by 2047. Now, startup founders including Zepto CEO Adit Palicha, Zoho founder Sridhar Vembu and Paytm founder Vijay Shekhar Sharma have countered Goyal's comments. Aman Gupta, however, said that pitching the country against China is a smart strategy. Benchmarking against China, the US or anyone else, he says, isn't weakness, it is a smart strategy. He also said that India is already the third largest startup ecosystem in the world and the fastest growing major economy. But if India wants to be number one, then it needs to go deep into AI, deep tech, climate, mobility and infra. He also said that India needs its own large language models and innovation stacks that compete on global standards. Add to that the fact that India is also of a scientific temper and that may be converted into a scientific risk. More patient capital and other such need to come by way of the policy infrastructure in the country. Moving on, with US President Donald Trump's sharp tariff hikes on imports from China and Vietnam going as high as 54% for China and 46% for Vietnam, smartphone giants in India like Apple and Samsung are rushing to recalibrate their global supply chains, and India is emerging as a winner. Apple, the world's top electronics seller, has already begun shipping iPhones made in India to the United States in a move that could drastically reduce exports from China. Indian factories run by Foxconn and Tata Group, which recently took over assets from Taiwan's Wistron and Pegatron, are now being positioned as Apple's primary base for fulfilling US demand. Samsung too has increased its shipments from India to the US in the first 3 days of April, whereas Apple has reportedly sent as many as 5 plane loads worth of Apple products to the US to avoid the US tariffs. Now remember, more smartphone shipments are expected in the month of April to beat the May 3rd 26% tariff deadline. Right now, the 6th April deadline pertained only to the 10% baseline tariffs, and that is the reason Apple and Samsung have both rushed to export more and more of their shipments to the US. Now, according to top industry sources, this could lead to a major expansion of Apple's manufacturing footprint in India, likely pushing iPhone exports to the US well beyond the current about $9 billion odd to counter China, which is slapped with higher exports, and Samsung, which also is feeling the heat with its Vietnam factory that exports about $55 billion worth of goods. It could now look at India, where it will find cheaper to export to the US, as the tariffs on India would be just about 26%. Remember, all of this could eventually lead into major new investments, new jobs, and hopefully a boost for Indian government's Make in India initiative in the electronic space. But moving to news that generated over the weekend, thousands of protesters had gathered in Washington, D.C. and across other parts of U.S. yesterday and on Saturday, part of some 1,200 demonstrations expected to form the largest single-day protest against President Donald Trump and his ally Elon Musk since they launched a rapid-fire effort to overhaul government and expand presidential authority. Now, thousands took to the streets of downtown LA to protest against US President Donald Trump and his policies. Aerial footage showed crowds holding placards gathering around LA before the large congregation moved in unison down the city streets. A giant balloon in the likeness of Trump was also being carried along. Meanwhile, warnings of tyranny and corruption rang out as protests in Dallas, Texas joined in hands-off demonstrations held across the United States. Thousands of protesters gathered in front of the Colorado Capitol before marching through the city to protest against President Donald Trump and his billionaire ally Elon Musk. Meanwhile, Atlanta also saw protests as protesters marched through Atlanta, Georgia, joining more than 1,000 demonstrations nationwide in what was expected to be the largest single day of protest against Trump and Musk. Now, amid singing and dancing, thousands of protesters gathered in New York to voice their opposition towards Trump and Elon Musk.
This is what democracy looks like. This is what democracy looks like.
And all these protests against Donald Trump, when arguably he had inherited a healthy economy and his target was to keep inflation low. But with all these tariffs kicking in, inflation in the US likely to surge high at levels never seen before. Meanwhile, US customs agents have started collecting President Donald Trump's newly imposed 10% baseline tariff on all imports from several countries, which is part of his push for what he calls fairer trade. Moreover, higher levies on goods from 57 major trading partners are set to kick off over the next few days, likely raising prices and heightening trade tensions worldwide.
U.S. customs agents on Saturday began collecting President Donald Trump's unilateral 10% tariff on imports from several countries. The initial baseline tariff effect at U.S. seaports, airports, and customs warehouses at 12:01 a.m. Eastern Time, ushering in Trump's full rejection of the post-World War II system of mutually agreed tariff rates. Higher levies on duties from 57 larger trading partners are due to start in the coming days. Trump's tariff announcement days earlier shook global, wiping out $5 trillion in stock market value for S&P 500 companies by Friday's close, a record two-day decline. Prices for oil and commodities plunged, while investors fled to the safety of government bonds. Among the countries first hit with the 10% tariff are Australia, Britain, Colombia, Argentina, Egypt, and Saudi Arabia. This Wednesday, Trump's higher reciprocal tariff rates of 11% to 50% are due to take effect. European Union imports will be hit with a 20% tariff, while Chinese goods will be hit with a 34% tariff, bringing Trump's total new levies on China to 54%. Trump on social media Saturday told Americans, quote, "This is an economic revolution and we will win. Hang tough. It won't be easy, but the end result will be historic." Some world leaders moved quickly to strike a deal with Trump to avert economic disruption, while others weighed countermeasures. Israeli Prime Minister Benjamin Netanyahu is expected to visit the White House on Monday, sources said, as unspecified goods from the country face a 17% tariff under the new policy. Japanese Prime Minister Shigeru Ishiba was reportedly seeking a telephone conversation with Trump. Tokyo faces a 24% levy. Trump is excluding goods that are subject to separate 25% national security tariffs, including steel and aluminum, cars, trucks, and auto parts.
And the Indian stock markets are just about opening, and as expected, it is a major bloodbath on the Indian markets. The Sensex and the Nifty are both down about 5% in the opening bell. 5% crash of the Indian markets. This is a grave reminder of the kind of impact we saw during COVID-19, and the Indian markets have not corrected this much ever since the COVID pandemic struck in 2020. It's a 5% on the benchmark indices, and look at the Nifty 50 heat map. The biggest pain coming from energy stocks and IT this morning. Reliance is down about 6%. ONGC is down almost 9% as we speak. It could be hitting the lower circuit anytime soon. Similarly, the IT stocks are badly bleeding this morning. Wipro is down about 7.5% in just about the first minute of trading already. Remember, things could go either way. This is the reaction which is coming in the Indian markets after the S&P 500 and the Nasdaq in the US had sunk sharply on Friday after the Indian markets had closed. The impact of that has been felt on all Asian markets as well. Remember, the futures market, both the futures in Japan as well as in South Korea, have been suspended due to hitting the lower circuit. But this seems to be the mood right now in the market. You've got the banking stock also bleeding. The entire pack is down on an average between 3.5% to 4% or so. This is the story coming in from HDFC Bank, about 3.4% down. Remember, on Friday, the banking sector was one positive story for the Indian markets. But apart from perhaps just Bharti Airtel in the green, up about 1%, every other stock on the Nifty 50 heat map is down in the red this morning. Look at Infosys now. Infosys has tanked almost 9%. It looks like there is going to be some sort of a lower circuit being hit, if not on the entire index, which is already down 5%, definitely on some stocks which are heading towards that negative 10% this morning. Tata Motors is down about 8% or so. Remember, Tata Motors had announced that all its Jaguar Land Rover shipments from the UK to the US stand suspended. This was the news that came in over the weekend. Tata Motors is down almost 8% or so. Infosys nearing that 9% decline. ONGC is down about 7% or so. Reliance is down about 5% this morning. Let's take a look at what is happening in the small cap and mid cap space. Let's look at the mood check as markets just opened at 9:15 a.m. Like we told you, about 5% hit is what the Nifty 50 has got. And oh my God, the bloodbath coming in from the small cap space this morning. Small cap 100 index is down about 10% in morning trade. 10% is a big number, and this is not the kind of decline that the Indian markets have seen. Remember, until markets opened this morning, the Nifty 50 from its last 6 month story was down just about 7%. So 7% in the last 6 months, and this number is down 5% already today. So from that 7% decline already witnessed in the last 6 months, Nifty 50 is down 5%. Let's come back to the heat map and see what are the other top headlines emerging from there. All right, Infosys heading south towards that minus 10%, down about 9.3% already. Tata Motors has gone beyond 8%, down about 8.2% or so. A little bit of recovery in Reliance. Reliance was down about 5%. Okay, and it recovered, and now it's Nifty futures is also a story today where Nifty 50 futures are down about 900 odd points. Remember, the futures market in Asia have been taking a major beating this morning. Let's quickly give you a sense of what really has been transpiring in the markets. This is how the S&P 500, the US benchmark, closed on Friday evening, Friday night, Saturday midnight India. Nvidia was down about 7%, Apple was down about 7%, Amazon was down about 4.15%. All of this stemming from the fact that US economy is under threat of perhaps heading into recession. All of this coming singularly in one stroke by President Donald Trump with the imposition of tariffs. Remember, markets had fared better on Friday, and this sort of a reaction from the markets coming in trading hours US time on Friday, where the S&P 500 has taken a major beating. So is the case with the Nasdaq. The Nasdaq which is the tech-heavy index of the US, and it is casting its ugly shadow on the Indian stock markets as well. Like we told you, Meta was down about 5%, Netflix was down about 6.6%, Apple and Nvidia down more than 7% in trade on Friday. Let's look at what was happening in the Asian markets as well. Let's begin with Japan. The Nikkei 225, as it opened this morning, pretty much mirroring the sentiment that we have seen on the Indian stock markets. It was a sea of red. Stocks of companies like Xiaomi were down as much as about 12 to 13%. So seems to be the case with Tencent, which is one of the biggest investors from Japan, investing into tech companies and IT companies across the world. Tencent was down more than 10%. Energy stocks taking a massive beating in Japan as well, down about 12% or so on average. Japan definitely not looking good. Remember, the futures trading in Japan and South Korea had been halted due to many of these futures indexes hitting their lower circuits. Let's quickly move over even to South Korea. The Kospi has also seen cuts like we haven't witnessed in the longest possible time. Samsung was down about 4% or so in trade this morning, and pretty much a similar story coming in from all stocks. LG, which also finds a big market in the US, is down about 3% in South Korea. Remember, Samsung, the electronics company, is down about 4.5%, but even in the health technology space, with medical devices also now falling prey to Trump's tariffs, even the health sector within Samsung is down almost 5% or so in trade. Hyundai is down, Kia is down. Hyundai was down about 4.6%, Kia was down about 4%. These are brands that export to the US market, all now falling victim to Trump's tariffs. And the Indian story this morning not looking pretty at all. It is a sea of red. Bharti Airtel, which was one of the sectors or one of the stocks which had opened in the green, also now in the red. So this is the fallout that we are seeing of Donald Trump's tariffs. We really don't know which way the markets are likely to go from here, but from what it seems, this is a near sinking feeling which investors would be facing today and feeling today, and their investments down about 5% in just the first 5 or 6 minutes of market open, not looking good. There are reactions, of course, coming in from China, where China is looking at imposing retaliatory tariffs on the US. We haven't really heard anything substantive from the Indian government as yet on how it's going to deal with the onslaught of Trump tariffs. But this is the mood of the market right now. We will get you another mood check as well as soon as and when it is ready. But for now, let's slip into a quick break. When we come back, we will also have with us Kranti Batini, who will decode the stock market rout that we are seeing not just in India but globally. Kranti Batini is coming up next. You are watching Morning Brief at 9.
What does it take to be the greatest in the world? There is one thing which truly sets you apart. Your inner strength. Sundiru DMT Reebok. True inner strength.
I need expert performance. I need my career.
History for a reason tonight.
Will it change the shape of American foreign policy? Violence has erupted in Manipur once again. How can we pass judgment, sir, before any inquiry that, they were volunteers or militants, sir?
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Bharat welcomes the world to a new era of creativity. Waves, World Audio-Visual and Entertainment Summit. Connecting creators through Creative Sphere. Wave Accelerator. Waves Bazaar.
Where stories, ideas and content go global.
Connecting countries through global media dialogue and Bharat Pavilion.
Shaping narratives and partnerships. Culture, cinema, gaming. Waves fuels the next wave of entertainment.
Connecting creators, connecting countries. Waves 2025.
In the age of OTT platforms, to watch or not to watch? That's the question. Because you are what you watch. It's our review, but your choice to skip it or stream it. Hello and welcome. I'm Krishna Kumar. This is Skip It, Stream It.
Welcome back. You are watching Morning Brief at 9. Let's quickly get you the action on the Wall Street. The Nifty 50 not looking good at all this morning. Remember, markets had crashed about 5% on opening today. They have recovered slightly. The Nifty and Sensex are now both down in the 4% range. Nifty 50 down almost 4%. Sensex is down about 3.5%. The kind of sharp selling that we had seen in the small cap space, it was down about 10% or so when the markets had opened. It has recovered a little. Look at the volatility in the Indian markets today. It is up almost 55% from the Friday closing. Volatility now standing at about 21 or so. Let's look at the Nifty 50 heat map and make sense of which are the sectors which are leading right now. Well, the IT pack, like we've been telling you, is taking the massive beating right on its chin. We had seen stocks of Infosys and Wipro crash steeply. There has been a little bit of buying, a little bit of recovery from the times markets opened at about 9:15 to about 9:30 right now. In about 13-14 minutes of trade, we have seen a little bit of recovery, but Infosys now down about 4%. Wipro has recovered a little, but still down about 5%. Meanwhile, Tata Motors going straight into that depression zone of about 8% or so, more than 8% down already. This is the story which is a fallout of nothing but the Trump tariffs which were imposed, which has not just sent the Indian stock markets in a tizzy. Remember what happened to Wall Street on Friday. The S&P 500 had tanked at levels unprecedented in the last 5 years. A similar sort of a sharp decline is something that the markets had witnessed only 5 years ago during the COVID-19 pandemic. And this was the story from the S&P 500, the top 500 companies which are listed on US markets. But let's also look at the tech-heavy Nasdaq, and Nasdaq had also slid to levels unprecedented with the heavyweights Apple and Nvidia that were down more than 7%. And this is obviously casting a shadow on the Indian IT story and Indian markets, which are seeing a massive fall this morning. If anybody calls it a correction, well, I think they stand corrected. This is a lot more than correction. This is not just a valuation bubble. Is pretty much something which is unprecedented and not seen in the last 5 years. Meanwhile, let's quickly take a look at the mood on Wall Street as stocks plunged on Friday and what the commentary around that seems to be. Let's look at the Wall Street story.
U.S. stock indexes rebounded to close higher on Wednesday ahead of tariff announcements, with the Dow adding more than 0.5%, the S&P 500 gaining almost 0.7%, and the Nasdaq climbing nearly 0.9%. Trump, after the trading session, announced a 10%.
Well, that was the mood last week on Wednesday when markets had actually inched a little higher, when the commentary wasn't that strong when it came to Trump tariffs. But that commentary is now pretty much turned on its head. Even US Federal Reserve Chair Jerome Powell is sounding the alarm bell over President Donald Trump's sweeping new tariffs. In a statement, Powell said that tariffs are larger than expected and warned the economic fallout likely will be too. According to Powell, the Fed chair, higher inflation and slower growth, the recipe for stagflation, could be coming soon, creating tough questions for the Fed as it describes what to do next about interest rates and economic policy. Listen in to Jerome Powell.
Federal Reserve Chair Jerome Powell said Friday the tariffs imposed by U.S. President Donald Trump could lead to higher inflation and slower growth. That would create a potentially difficult set of decisions ahead for the central bank.
We face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation.
This result would undermine both of the Fed's mandates of 2% inflation and maximum employment, Powell said at a business journalists conference in Arlington, Virginia. Powell spoke as global markets continued a swoon that has wiped some 10% off major U.S. stock indexes since Trump announced a raft of new tariffs on Wednesday. Trump, in a social media post, called on the Fed chief to cut interest rates, saying it was the perfect time to do so. Powell said they need more data before making any decisions.
We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy.
Investors in contracts tied to the central bank's policy rate appear to be expecting the risks to slower growth will dominate. Markets now expect 4 percentage point rate cuts from the Fed this year, versus 3 before Trump's announcement of tariffs that could tax imports an average of as much as 27% by some estimates, versus about 2.5% at the end of the Biden administration.
All right, and that is the commentary coming in from Fed Chair Jerome Powell. Remember, Indian markets have taken a massive beating today, but India is not alone. The same sentiment is reflected in other Asian markets, including Japan and China. Let's begin first with Japan, where the futures market on the Nikkei 225 has taken a halt this morning because of it hitting the lower circuit in trade. This is a story coming in from Japan. Toyota is down about 5%. Remember, Toyota happens to be one of the big suppliers to the US auto industry. Even Honda is down about 4% or so in trade this morning. Look at the electronic story coming in. Sony is down almost 9.6% as we're speaking right now, and other products, the likes of Hitachi, are also down more than 9% in trade this morning. The story is being reflected even in the Hang Seng Index on Hong Kong off the mainland China coast. And this is the story coming in from Hong Kong. Tencent is now down more than 10%, and Xiaomi is down about 14% or so in trade. These are big headliners. Look at BYD. BYD is down almost 15% or so, 14.19% is the story coming in from BYD. But remember, meanwhile, China has hit back in the escalating trade war with the United States, announcing new tariffs of as high as 34% on US goods. The move, revealed by China's finance ministry, marks the most serious escalation yet in the standoff with US President Donald Trump. The new tariffs will take effect on April 10th and come on recession fears as these grow and global stock markets reel from the fallout. Look at how China is retaliating.
China hit back hard against US tariffs on Friday with countermeasures of its own. Beijing announced tariffs of 34% on all US goods and placed curbs on the export of some rare earth materials. China's finance ministry said the additional tariffs would be imposed from April 10th. The moves further deepened an escalating trade war.
My fellow Americans, this is Liberation Day.
On Wednesday, Trump announced China would be hit with a 34% tariff on top of the 10% he imposed earlier this year. Agriculture trade took another hit from this week's move. Chinese customs imposed an immediate suspension on imports of sorghums from grain exporter C&D USA. It also blocked imports of poultry and bone meal from 3 US firms. Beijing further announced controls on exports of medium and heavy rare earths and added 16 US entities to its export control list. The move bans the export of dual-use items to affected firms. China also put 11 firms on its unreliable entity list, which allows Beijing to take punitive actions against foreign entities. Those include companies linked to arms sales to democratically govern Taiwan, which China claims as part of its territory.
All right, meanwhile, there has been a little bit of a recovery, and I don't know whether we can call it recovery or not, but it is not as bad as it seemed just about 20 minutes ago when markets opened. Nifty 50 and Sensex are off their lows of 5% when the markets opened this morning, now down about 3.2% or so on the Nifty 50 benchmark. Sensex is down about 3%. Remember, Sensex had lost almost close to 3,000 points in early trade. We are seeing a little bit of a recovery. Even the volatility has ebbed a little bit, down about 19.98, you can say about 20 levels or so. Some recovery in the small cap space. Remember, small caps had opened more than 10% down. There's a bit of a recovery that we are seeing. Small caps on your screen right now down about 4.7% or so. The story is not just limited to the bloodbath on emerging markets, Asian markets, which are falling out as a consequence of the whiplash of Trump tariffs in the US stock markets. It is also seen in European markets this morning. Look at the German index, the DAX, which is also all the way in the red this morning. Big IT companies like S&P, which look at clients in the US, this stock is down about 3.5%. And look at the banking stock, the finance stock coming in. The Deutsche Bank in Germany is down about 10% or so. Even the product manufacturer Siemens, the electronics maker Siemens, is down about 6% in trade on the last closing day. And battery maker BASF is down about 4.5%, perhaps reeling under pressure from what was really going on with the auto sector and the tariffs imposed on the auto sector. Meanwhile, let's cut back to the Indian stocks. A bit of a recovery, but stocks like Tata Motors and the entire IT pack reeling under tremendous pressure. The story on energy stocks also this morning not looking good. We told Kranti Batini is now with us. Kranti, good morning. What a day to have you here with us. A kind of decline in the markets this morning like we've never seen in the last 5 years. This takes me back to COVID-19 days and the horrors of March 2020, now pretty much rearing their ugly head here in April 2025, 5 years later. How do you see the mood of the markets from here on, Kranti?
Yeah, Karthik, you defined in a right way. Your statement is absolutely correct. Okay, it's a very unprecedented sell-off. It's looked like the COVID crisis, but COVID was it was not by and large. It's not man-made. It's a pandemic, but this time it's a completely man-made. Okay, the tariff wars are started by man, okay, and the crises are man-made at this point of time, and it's a complete global rout and a complete sell-off across the globe. There is no place to hide in the market at this point of time. All the investment avenues, it can be gold was down last couple of days. The commodities are down, so the complete negative sentiment is hovering around the globe. In terms of the investment avenues are concerned. So the point to ponder upon at this point of time, it's completely unprecedented. One need to be a little bit cautious at this point of time in terms of moving their coins at this point of time. But one thing is the domestic centric sectors in India. It can be the railways, it can be the consumption theme in India. It is intact. So it's a good opportunity. The crisis would be there for some time, but somewhere, since, as I mentioned, it is man-made, so it can be corrected. So the market has been waiting for the corrective phase, but it seems to be the U.S. administration is a little bit indifferent at this point of time. They were proactive to handle COVID crisis, but this point of time, since the crisis are started by them, they are little bit indifferent at this point of time. They are in a wait and watch mode to make the corrective steps at this point of time. That's where the global sell-off is getting triggering, and we are experiencing the worst in the markets.
Right. You're saying this is a man-made crisis. There's absolutely no two ways about it, no second thoughts. It is a man-made crisis. But the point is the man going to man up and correct this crisis? Because the stand that Donald Trump seems to be taking right now is that, hey, this is going to be a rough ride for a small period of time. But after that, the going is going to be great. If I remember him saying, and I can quote him, it's going to be amazing. I mean, if this is the start of amazing, then it obviously a lot of fear in investors who are holding on to their investments, not knowing whether even this is the bottom or there's a deeper pit that they are likely to fall into.
Absolutely, Karthik. Absolutely. See, in terms of the handling 2008 crisis, the Obama administration was completely failed. By the time they were delayed to take the corrective measures, the damage happened, and the US experienced 2000 great financial crisis for more time. For a simple delay of some 48 to 36 hours delay, the damage happened. The same thing, it can be there. It can be there. There might be a burning, but if there is, the scars will be there for more time. That's what the US administration has to identify. I don't know who are the advisors for Donald Trump leading him at this point of time. But the U.S. Treasury and the U.S. State Finance Department and all the advisors to him has to guide him in a right way to avoid this crisis. Of course, we are already in the crisis, but they need to take very aggressive preventive steps to stop the further damage.
Right. So, Kranti, just help me understand, take a few steps back and explain to our viewers. Now, with these tariffs, inflation in U.S. obviously going to skyrocket. Some economists are estimating the impact to be as high as 20 to 30% on everything that the US consumes. So that is not going to allow the US Fed to cut interest rates anytime soon, and that seems to be the stand that Fed Chair Jerome Powell is also taking. But India commences its monetary policy meet today. India's inflation numbers so far seem all right. Now, if RBI Governor Sanjay Malhotra goes ahead and cuts repo rate by 25 basis points, and that is the estimate right now, that means even debt-based investments, fixed deposits, etc., as an alternative to stock market investments become less lucrative for Indians. So what does the Indian investor, retail investor do? There are also reports, Kranti, that gold prices would correct, and some reports estimating that they could correct sharply and come down to maybe 56,000, 57,000 levels. So people who have invested in safe haven assets like gold also now sitting on the edge. Like you said, there's no way to run, there's no way to hide. What does the investor do from here?
Karthik, there are ripple effects. The point, everything is interconnected. The US inflation and related to the Fed action, and coming back in India, the inflation is cooling off a little bit, but RBI have the headroom to reduce the interest rates further, because we are not a zero interest rate regime. RBI always maintained a very tight, strong monetary policy. So the impact for the India's fixed income also, it can be nominal. By and large, when we compare the things at this point of time, by and large, right now the RBI focus should be to give the elbow to growth. That's where the RBI stand at this point of time. But coming back to US, it's a double whammy. It's connected to every link. That's what the crises are at this point of time in US. Every measure, it's too late at this point of time. They have taken a unilateral move, and the administration in US is facing the heat and the overheat. They might giving a feeling that everything is perfect, everything is right, they are on the track. But they are not on the track. These are the unprecedented movements for the US administration at this point of time, because it always said in the history, the politicians and policy makers never accept their mistakes, but they have to pay the price.
Yeah, you're right. But here we are talking about a politician who has been in the business of running business and real estate, no less. And something like this or something as significant as this market rout, high inflation, stagflation, perhaps recession escaping his attention is something that at least to many people, Kranti, was unexpected. Well, we will continue with this discussion. Stay with us,
Karthik, on a lighter note, if we make any comments, you and me don't get the visa next time if we are traveling to US.
Well, I'm not sure anybody, given what is likely to happen in the US, the inflation and recession, would be keen to travel to the US, Kranti. I mean, there would be some who will buy that Trump imprinted gold cards and he's proudly holding those out, but those are few and far in between. I really wonder, with this entire manufacturing push, make America great again, where is the labor going to come from? Because at the other end, you're also deporting cheap labor which is available in the US.
Yeah, absolutely, Karthik, absolutely. It is completely unprecedented and unwarranted.
We will continue with this discussion. We told you that China is hitting back with tariffs on the US. Story even from the European Union. The EU is gearing up to push back against US President Donald Trump's new tariffs in a show of unity. EU countries are expected to approve a first wave of targeted countermeasures in coming days, covering up to $28 billion worth of US imports. More details and other such issues, from dental floss to diamonds, coming up in this story.
European Union countries will look to present a united front against U.S. President Donald Trump's tariffs, likely approving retaliatory tariffs on up to $28 billion of U.S. imports. The move, expected in the coming days, would tax a range of U.S. goods, from dental floss to diamonds. By doing so, the EU would join China and Canada in imposing retaliatory tariffs, potentially escalating a global trade war that could make goods more expensive for billions of consumers and push economies around the world into recession. The 27-nation bloc faces 25% import tariffs on steel, aluminum, and cars, and as of last week, reciprocal tariffs of 20% for almost all other goods. Trump's tariffs cover some 70% of the EU's exports to the U.S., which last year were worth a total of $585 billion. U.S. duties on copper, pharmaceuticals, semiconductors, and timber from the EU are likely still to come. The European Commission, which coordinates EU trade policy, will on Monday propose a list of U.S. products to hit with extra duties in response to Trump's steel and aluminum tariffs. But among EU members, there are differing opinions on how to respond. France has said the EU should work on a package going well beyond tariffs, with President Emmanuel Macron suggesting European companies suspend investments in the U.S. until, quote, things are clarified. Ireland, almost a third of whose exports go to the U.S., has called for a considered and measured response. And Italy, the EU's third largest exporter to the U.S., has questioned whether the EU should hit back at all. The initial EU counter tariffs will be put to a vote on Wednesday.
All right, so EU also contemplating hitting back, but some sort of a difference of opinion in member nations. Meanwhile, like we told you, China has already hit back with retaliatory tariffs on the US, but no official word from the government of India just as yet on whether India is also thinking on the lines of retaliating or not. Kranti Batini continues to be with us. Kranti, the kind of sell-off that we are seeing in the market today, look at the screen right now. It is completely red. Like you and I have been mentioning, this is pretty much looking like a man-made repeat of a potentially non-man-made COVID-19 5 years ago. But what we are really looking at is disaster in the making. Sensex is down almost 3,000 points right now. The Sensex, the Nifty futures is also taking a beating, Kranti. And what we saw in Japan and South Korea this morning was this lower circuit being hit on futures. How do you think the Indian markets are going to go from here, especially those who are invested in the F&O space?
Karthik, in terms of the F&O space is concerned, it's speculative and the stakes and the risk appetite is very much high. So at this point of time, markets are in a completely sell-off mode. But by and large, what I can sense at this point of time is Indian market is I can't say it's completely insulated, but the global tremors have been impacting the Indian markets. But by and large, we are at a right stage at this point of time, despite of the global sentiment has been negative. But by and large, there will be a quick recovery can be expected once the dust gets settled. But when is the greater question? But we are by and large at a recovery phase. We can expect a quick recovery in India.
All right. But Kranti, help us understand in this entire debate about coupling or decoupling with the US wanting to sort of isolate its own economy and not really care much about what is going to happen to the rest of the world. In that sort of a narrative and that sort of a scenario playing out, how much of an impact of US stocks continue to reel Indian stock markets? Will that coupling continue for the foreseeable future until India is able to forge perhaps other partnerships, bilateral or free trade agreements with other countries? Or do you think US is going to continue to be central to India, Asia, no matter what the narrative on tariffs is?
Karthik, we need to devise your question into two parts. One is in terms of the trade is concerned, by and large, the impact would be very less in terms of the trade. At over a period of time, the Indian administration is going to have a consensus view. There would be negotiations. Coming to the markets are concerned, we may say we are decoupled, but we always, in terms of the capital flows are concerned, we are recoupled, and the global sentiment is concerned, we are always recoupled with the global sentiment. When there is a global rout, definitely there will not be any exception. We have to sell because in terms of the market sentiment is concerned, by and large, we have to face that heat because of the entire global rout is concerned. We have to get prepared. That's where the stock market investments always have these kind of market forces that drives. One need to be prepared for that. But in terms of the trade is concerned, consensus can be arrived, and the businesses can be decoupled in terms of the trade is concerned. But in terms of the capital flows and the global market sentiment is concerned, one has to face this thing. But over a period of time, market will realize the value. As always, John Keynes always quotes, market can be irrational as long as the investors are solvent. So one need to prepare. That's what the equity risk forces are.
Kranti, now one final question to you, and this is with respect to foreign capital, and you're saying that capital markets will continue to be coupled and interrelated. So the question really is that we've seen the kind of rout playing out in the US where the S&P 500, the Nasdaq are down more than 6%, almost 6% or so. We've seen the markets in Japan and Korea tanking in excess of about 7% on Japan. Indian markets are still down about 4%. So is India and Indian capital markets taking it a little better? Are investors likely to be more focused on India, even in the emerging market space? If capital money and if foreign money has to flow across the world, then are they going to look at the US markets and other Asian markets with a greater degree of skepticism as they would look at India? Because India, despite this massive fall that we are seeing today, is still performing better than other markets that we got on the screen some time back.
Yeah, Karthik, by and large, we are insulated in terms of the consumption is concerned, in terms of the trade is concerned. So that is the reason the impact is there on Indian market, but the ferocity still when compared to the global peers, the ferocity and the volatility is in terms of the comparison, we are better than them. But still we have to play the steps as per the global music.
All right, we will play the steps as per the global music. Kranti Bhattini, thank you so much for joining us this morning with your inputs. And this is the mood on the market right now. On your screen, you've got the Nifty 50 heat map, and now you've got the mood check of the markets. Nifty 50 is down about 4% in trade. Sensex also near the 4%. Remember, markets had opened about 5% down. This was the sharpest decline that we had seen in the last 5 years ever since the COVID-19 pandemic had struck Indian capital markets. Kranti Bhattini, early on the show was just telling us that COVID may not have been a man-made disaster, but this one surely is. This is the mood of the market right now. A little bit of recovery, but still this is as sharp a decline as it gets. Before we go, let's quickly look at the Nifty 50 heat map and give you a sense of which stocks and which sectors are faring how. A massive beating coming as expected on the IT stocks, a direct fallout of what we saw in Friday's trading in the US. On an average, about 5% is the kind of beating that the IT space is taking this morning. The consumer durable space, especially auto, not looking good. Tata Motors is a stock we've been talking about. It is almost down 10% right now, 9.99%. This could be in the lower circuit territory anytime soon. We will keep a track on that. And the banking space also down on an average between 3 to 4% or so. The mood on the Indian stock markets not looking good this morning. Of course, through the day, we will keep bringing you live updates on the market. But for now, that's a wrap right here on Morning Brief at 9. Thank you so much for watching. We will be back with more.
Greatest in the world. There is one thing which truly sets you apart. Your inner strength. Sojiri TMT Reebok, true inner strength.
In the age of OTT platforms, to watch or not to watch? That's the question. Because you are what you watch. It's our review, but your choice to skip it or stream it. Hello and welcome. I'm Krishna Kumar. This is Skip It, Stream It. Every brand tells a story. And they are the storytellers, the Sutradhars. They present a brand with band, baja and barat to you. They are the Brandwalas.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
We made history for a reason tonight.
Will it change the shape of American foreign policy? Violence has erupted in Manipur once again. How can we pass judgment, sir, before any inquiry that, they were volunteers or militants, sir?
In the age of OTT platforms, to watch or not to watch? That's the question. Because you are what you watch. It's our review, but your choice to skip it or stream it. Hello and welcome. I'm Krishna Kumar. This is Skip Keep it streaming.
Light, camera, and